So welcome back to Reimagine. In this whole conference, this time round, I think we're really seeing so much about the maturation of the space, the development of the space, the growth of an ecosystem that spent so long trying to get to the stage where it is now. And for some of those new people in the space, it can sort of seem as if it's always been this way, right? We've always had these layers upon layers. We've had DeFi, CeFi battles. We've had centralization, decentralization battles. But that hasn't always been the case. This has had to grow organically over time. So, I think it's important to bring in some of these players that can really talk about that maturation, talk about the development, talk about the innovation that's happening in the space. And I think my next guest here is perfect for that sort of conversation. I'm joined now by Ryan Berkun, founder and CEO of Telefinance. Ryan, firstly, thanks so much for being with us.
Thank you so much for having me today, Asher. Really excited to be here and share everything we're doing at Teller.
Fantastic stuff. And you guys have such an interesting take and development. I've been doing my research on what you guys are building over there, but rather than me try and wax lyrical, I want to hear directly from the horse's mouth. Tell us a little bit, about Telefinance. Tell us what it is for people, and maybe help define some of the problems that you guys are trying to solve, because I think that really helps a lot of people to understand where you fit in this, as we said, ever more complex space.
Yeah, I'd love to, harp on a point you mentioned, which is that organic growth and organic usage of blockchain and what this space has been trying to achieve. So what Teller has always been about is kind of bringing blockchain and the access to DeFi outside of its current limitations of over-collateralization. And if you look at kind of the big picture of where we think, the decentralized finance space is going, it's going to end up looking a lot like your traditional finance space, where Rocket Mortgage helps you get a mortgage for a home, Lending Club helps you get a loan today, and Visa and MasterCard offer credit lines that become this credit card that people have. We think DeFi will evolve to a point where users get access or global access to these types of services, just like the traditional finance world, in a way that's backed by global money markets of DeFi that doesn't have limitations of borders and can be accessed by anyone democratically across the globe. So there aren't restrictions based on who you are or where you may be from or your experience. So Teller started as a way for the blockchain industry, which always needed someone to buy in before they could use it, to give access to someone before they have to step into the ring, as we say, of DeFi. DeFi grew from the idea that MakerDAO and many other over-collateralized networks could have some type of new mechanism to create loans or debt. With MakerDAO, Compound, Aave, users will deposit funds and they can borrow against that collateral value. So by collateral value, I mean the asset you're depositing at that current price. Let's say I'm depositing $150 of Ethereum into Maker or Compound. I could borrow up to $100 worth of a stable coin or a stable unit. That money I can then go use, in DeFi, it's pretty limited, the applications today with over-collateralization. I could not sell out of my crypto, which means I would have to already be in crypto to use it. Or I could leverage on crypto. I could go buy more, which means to use it, I must have already had crypto coins. What we see bringing forth the next wave of DeFi, and really the perspective that DeFi today is just like traditional finance, is an underlying risk assessment layer. When you look at traditional finance today, it's the idea that I, as a person or an institution, come to someone with money and I say, here's who I am. Can I borrow for a period of time? And I promise to repay at some point in the future. That's everything. That's homes, insurance, credit cards, etc. And that is a world based on risk assessment. That's where Teller wants to go. So Teller wants to be this global risk assessment and credit related data that can power these type of markets, that can power something like insurance or mortgage or credit lines. And with Teller, we've actually built out the initial version of the protocol to exemplify the power of risk assessment in DeFi. So the initial version of Teller is a money market, just like I was describing with Compound or Aave, where users can deposit money and they can earn interest. But borrowers, on the other hand, can connect their real world information. To date, you can connect over 2,000 financial institutions. That data is processed through a open source risk assessment algorithm that actually runs computation based on the data and outputs loan terms. So just like, a person at a bank would, sitting at their computer say, okay, you are so-and-so, here's the information we have. My risk assessment says you can get this type of loan. Our algorithm does it in an open source and transparent way, and it runs autonomously. So the data itself is given back to the user, and if the user likes to, they can submit that data on chain to complete the whole circle of they can actually get access to the money based on that loan that was generated. That's Teller v1. Teller v2 really branches into the idea that, shown by the use case of credit and under-collateralization, we can bring risk assessment to anyone and any type of entrepreneur that wants to build on DeFi for the next wave of credit-based markets.
I mean, there's so much to unpack there, but I want to start on one particular point of interest that I find. You spoke about those people who already have to be in the crypto space, already have that crypto exposure in the traditional DeFi system, and I think that's such an interesting point to me because, as much as people like to talk decentralization, people like to talk, the development of an ecosystem, those bottlenecks of the fiat on and off ramps are still so huge. Can you tell me a little bit more about Teller's approach to dealing with that and how you're looking to mitigate against some of those on-off ramp sort of elements? I know you already touched on it, but just build on that idea a bit because I think that's so important to people.
Absolutely. We believe this juxtaposition of DeFi and the protocols today with that of fiat and the traditional world is really the most interesting frontier that DeFi has yet to fully explore. A lot of what's been done today in DeFi is exactly what you mentioned. The user must buy Ethereum or buy some other token to then get into the ecosystem. And that is a hurdle. Some countries ban the integration of fiat and crypto. In other places, not many providers have direct lines into it. So it's a really broken, kind of fragmented system of that on-ramp. Granted, many players in the space are working at making that extremely seamless and proficient. But in order to get access to DeFi today, you must already have money. So if you are using, if you want to use Compound or Aave and just earn interest or the rest of the kind of DeFi liquidity mining, you must buy in through that fiat on-ramp as you're describing. With Teller, we've taken the approach to actually not pair ourselves along the lines of the fiat on-ramp, not pair ourselves along the lines of money. We're paired along the sides of the data and the risk assessment because that's where we feel DeFi can go global. So there are two main issues that traditional fintechs have today. When they want to start or expand their infrastructure, their company, they have to partner or acquire a bank. So in order to offer loans to their users, they must either A, get a loan from another bank, a partnering bank, sign off as the signer on that loan, and then they offer that loan to the consumer. So they're sitting in the middle of it, and it's a very fragmented process. The other thing that fintechs today will do is acquire a bank, but that can cost, as you'd assume, 200 million plus. Right. Not every fintech can do that. With DeFi, you have this amazing thing, which is a money rail that is immediately globally accessible. So with Teller, the idea is that by connecting your data and there being a risk assessment algorithm, there can be a money market, that's built atop of Teller that is built for people that want to get access to loans like they would from your traditional fintech today that has to go through that process. But the money can work through, any partner that's partnered with that money market. And there can be a seamless conversion from, okay, I'm taking my loan out in USDC, and either I do a manual process of going from USDC to my bank account, or that specific type of money market already has a way to do that, to make that happen. So we actually, as Teller, are very focused on the data, the smart contract level, the risk algorithms, where we believe our partners and those building markets will be focused on the ways to get money in the hands of the user without them ever having to realize that, oh, it came from crypto, or with them seeing a difference. The interesting part about that is when they have to repay loans, obviously this floats money back into the DeFi space and the money markets. So where we see Teller is kind of at the Uniswap, the Compound layer as a protocol. And then our partners who will be building something for, say, a credit card, that's money that's sent to the merchant, or something like real estate, that's money sent to the seller. And that could be crypto, and there's fiat off-ramps related to it.
So going into that idea of creditworthiness, because that's something the fintech world has been looking to deal with for a long time, particularly in the States, obviously the credit score system, many have known for a long time, seriously broken, seriously damaged, seriously reliant on factors that are fundamentally out of date, and something you did a few years ago, when you were in a completely different financial situation, can impact you for the rest of your life. Fintech has been seeking to deal with that for a long time, but the part that I find interesting in your approach is, as you say, the open source nature of your algorithm. So many of these sort of fintechs, and I've seen them come and go in all forms, keep that algorithm very close to the chest. That's their unique selling point. That's their IP that they're hiding. You've open sourced this, so tell me a little bit about what difference that makes and how you think that might impact the trustworthiness and of your system versus other traditional fintech systems.
So the really interesting thing about being a part of a DeFi startup is that the bottom line of what you're working on can affect every single person in the world, because everyone deals with money. Everyone needs money at some point. Everyone makes money. It is kind of that medium that we all share. Just like we share emotions, we share the concept of money, or a medium of exchange. And because of that, we're able to think from a very human standpoint with that. What you just described is how so many people feel about the current credit system. When I make a mistake, it's opaque. I don't know how long that's going to affect me for. I don't really know how that affects my score. I may not realize that a credit check just for opening a specific credit card may actually affect my own credit score. So that's a scare for many people in the States and people that are doing transactions that relate on credit. It's tough to get a gauge on how this updates and affects my real world interface and applications. We wanted to change the script. And by taking the first kind of planting the flag and saying that these algorithms should be open source, we are making the first step, and I think of many, to give people a transparent way to understand how their decisions can affect their score or their report. Something very interesting about Teller is that while we have kind of this overall data connections, we don't have a specific score per se, because a credit score is a way for those institutions to have an easy comparable between two types of people. We think that risk assessment is going to be specific to the type of market you're looking at. And maybe, like you're saying, 10, 20 years ago, you got in some investment property and it didn't work out. That may not need to haunt you if you've been an incredible kind of either landlord or different type of kind of owner of property over the last 5 years per se. So that type of analysis would go into a specific risk assessment that is oriented to real estate, and your kind of real estate related score would come from that risk assessment. So it's very specific to what you're doing. And what we think about this idea of open source risk assessment is that you can start having a transparent way for using data for a specific purpose. Instead of having this global score that is kind of seen as draconian today, where there's anything you do related to any financial institution may come back to haunt you, in an open manner in DeFi and with your Teller score, you can know, hey, here's what I want to share from my personal world. Here's what I'm sharing from my Ethereum or blockchain world. And here's my repayment history. So we not only allow you to see what's happening with your data, we also allow you to opt in to share what data you want to provide. Because we kind of believe that fintech institutions today, while they keep it close to the chest, they also are not very transparent about what data they're looking at. They say, hey, give me your data, and users are very open because there's no other option to do this, to port over their data. With Teller, it's an opt-in process. So we want to, over time, support any type of data that can be connected to risk assessment, whether that's, something as obvious as payment history, and something as kind of unique as your, GitHub account, or how you have acted in specific social communities online. All that data is interesting for different types of risk assessments. And we think it's up to the user to opt in to say, I think this data is what I'm willing to share for a risk algorithm that can create a score for this specific use case. So you know what history you're open to share and what can affect you in the future.
So, I mean, there's two elements I want to draw from that. One is the idea of, obviously, if you're telling people they can choose what data they're able to put in place, does that not run the risk of obfuscation, of people hiding debts or hiding other serious problems that could potentially cause them to, default on potential loans or things like that? And then secondly, you can sort of wrap this together, or you can separate it in on the issue of privacy. I mean, you alluded to it there, but obviously when we talk about a blockchain, we're talking about something decentralized, permissionless, open source. There's questions of privacy or also come into play. Not to say that those sort of closed systems have necessarily been great messengers of privacy themselves, but could you speak to those 2 points and how you guys are looking to impact that world?
Yeah, absolutely. So the first thing is a part of gamification. And this is something related to the entire blockchain world, the entire yield farming space, and DeFi itself. If there's an arbitrage opportunity, someone will game it. So just like you mentioned, if someone would choose to leave out a debt or leave out something negative, they could in this idea. The way that we've designed the initial risk algorithm of Teller is that you start as the most risky person in the world, and the more you can prove to us, the more that risk decreases. So with specific types of data connections, it becomes very, very difficult to remove the good from the bad. Our integration with Plaid that supports the data connections, if you want to showcase the bank account that you have, Plaid will showcase both the assets and the liabilities that are located there. What we think will happen is that while the initial version of Teller has the idea that you start as very risky, and the more you can prove that you're a good actor, the more positive we kind of give you in terms of the score that you're receiving, or the interest you're receiving, the lower the APR, the more you can prove to us. We believe that other markets in the future will mandate specific data to be provided. So whether it's a data provider that's pulling data from Charles Schwab or Bank of America, there could also be data being pulled from cash flows on chain or kind of over leveraged positions that you might have elsewhere, maybe real estate or even in blockchain today. We think that other markets are going to say, hey, these data points are mandatory for you to first get access. Then everything else could be opt-in, so that they at least get the foundation of understanding, here's the initial picture we see of the user themselves. So wherever there's arbitration opportunities, or arbitrage, sorry, opportunities, people will figure out a way to gamify the system. And that's why we've developed the first version of Teller, to not say you're not risky, and the more risk you show us, the higher your points. It's saying from the start, you're super risky. We don't trust you at all. If you have a question, please.
No, please continue. On the matter of privacy, I think is where you are taking things.
Yeah, the next transition point is privacy, because we've done a lot of kind of user research and engagement with the community surrounding this topic. People are actually very open to showcasing who they are, their data, which is surprising to us, being very native to the crypto space, where it's about being anonymous and this kind of free access without showcasing a login. However, privacy is number one, and data must be private for everyone in DeFi and in crypto in general. And we believe that there are issues with the way that data is held on current institutions, the way that you're always being tracked with what you're doing. So we believe that with privacy, the data should not go anywhere further than the data provider and the user themselves. In that, we're building kind of the next versions of Teller to cement that narrative. So we've publicly announced our partnership with Mina. They are a ZK snark, so a zero knowledge proof blockchain. And it makes it really easy for you to be able to run a zero knowledge prove that the data is legitimate without ever disclosing the data. So in this way, a user can say, hey, I'm getting my bank account information, or I'm getting my social information from Twitter, any type of data. Mina is able to prove that the data source is legitimate, so it genuinely came from this API endpoint or URL. And then we're able to run a zero knowledge proof on the data. So an idea of that is saying, one, we can make parameters pretty much true or false, saying that, do you have a score from TransUnion or a FICO score above this? If it's above 700, true. If it's not, false. Your data was not disclosed. The other thing that we can also do is have these algorithms run in a zero knowledge proof like fashion, where the data is being kind of just privatized. So it's only on the user's browser. They're the only ones that see it. And then when it runs through the algorithm, we can create a zero knowledge proof that the algorithm did output these loan terms, but no one ever sees the information. As long as the algorithm is open source, this makes it very easy for us to do it, because you can publicly prove that, hey, here's the open source algorithm. We know through cryptographic principles, this is what it was actually run. And we can say, without ever sharing the data and the user never disclosing their information, these were their loan terms. Here's what they can get access to from the public blockchain in DeFi.
So you keep talking about the idea of version 1, version 2, and one of the key tenets that I saw reading your white paper and looking through your literature is you talk about Teller eventually developing into a fully decentralized platform. Now, talking about this, I mean, it's something that a lot of projects have claimed to want to do ultimately, but some of the timeframes on that are unclear. Whether or not that's actually achievable can be unclear. So I've seen this happen in so many projects, over the years. I want to hear, do you guys have a direct time frame for when you think you'll achieve true decentralization? Is this a process that you'll always be working on, to make things more decentralized as versions iterate? Talk us through a little bit of that process, because I think it's something that our audience is very cognizant of and interested.
I like to make an analogy to the other DeFi protocols in the space in regards to progressive decentralization. If you look at Compound or Uniswap, there is an argument that they are fully decentralized because the code itself can only be altered through governance. You must genuinely make a proposal, and that proposal be accepted for the code to change within the Compound protocol or the Uniswap protocol. However, they still have their own companies that are working on the next versions of Compound, of Uniswap. Mm-hmm. And because of that, they're able to articulate both that the protocols that they've released, which they name, Compound and Uniswap respectively, are decentralized. They don't control them anymore. However, the new code they're building is, of course, at the start centralized, because they need to make sure it's safe, that there can be upgrades if needed, and the team has some admin access to that. So we look at it in the same way, where it's a stepwise approach. And I think so will everyone in terms of DeFi. The first version of Teller was built as the use case that we can truly make this type of risk assessed market happen. We've developed it so there are no kind of central pinpoints that would cause us to not be able to say that the whole protocol is autonomous. The data providers, they can run their own kind of Ethereum node that says, hey, it's a real signer on the data provision, and they're whitelisted to the protocol. They themselves are centralized entities, but that doesn't mean that the protocol itself is. All the data provider is doing is saying, I am a legitimate data provider. I sign off on the data and I give it to the consumer. Amazing. The next thing is the algorithm. Since it's open source and can be run by anyone, now it can be autonomous, because we can prove through cryptography that the data, that the algorithm you're running is real. Awesome. You're able to run that locally. So anyone that loads it up could run that algorithm. And that algorithm is whitelisted to our kind of settings on the smart contracts. The third part is the smart contracts themselves, which that puts us in the same boat as someone like Compound or Uniswap. Right. So there's definitely some complexity here. It's taken a longer time frame to achieve something that will be more progressive in terms of decentralization, because we've had these off-chain and somewhat more centralized components from the start. However, what we plan to do is, as soon as we can, have the whole protocol on a point where it can be autonomous for this V1, so that we can switch over and kind of start handing the keys over to the community in the same way that Compound and Uniswap V1 and V2 can be governed by the community themselves. So we have the same approach. While that's happening, while the initial V1 is being automated, we are working on the next version, kind of bridging into the next version of Teller, which is corely focusing on this middleware part. The idea that we are this open source platform for anyone to start plugging in data sources privately anyone to launch new risk algorithms and partners that will work with to launch new risk algorithms. And really, we become more of kind of an ecosystem partner where we're working with other protocols to build on top of Teller, to integrate Teller, whether that's from the DeFi angle, partners that are working on under collateralized or credit related markets, or that's from Teller approaching kind of your traditional fintechs today. Of course, we know that PayPal is now very in on the crypto ecosystem. Venmo just launched a feature related to that. The likes of Robinhood, and we really want to start seeing other platforms like a Rocket Mortgage or big insurance providers starting to enter the DeFi space. So really what we see as kind of V1 was an application and a use case for Teller that we want to give to the community. And that's the first start of progressive decentralization. The V2 is this middleware platform where once we build it, we want it to really run autonomously, and we start being a kind of a grower of the ecosystem, just like how Ethereum at this point is an ecosystem of technology, but really it's that there's a brewing amount of developer interest and kind of enjoyment and growth from the entrepreneurial angle. And that's where Teller starts leaning into.
So, I mean, perhaps cynical I may be perhaps at this point. I would survive the 2017-18 ICO boom and saw a lot of claims made at that time, and things that came in and out at that point. I mean, I don't mean to push you on the point, but do you have a time frame for when you consider that you'll be handing the keys over to the community, or is it really based on developmental metrics?
It's based on development metrics. So we want to make sure that the protocol is as sound as possible. Ideally, over the next 6 to 12 months, the protocol is to a point where we can start handing the keys over to the community. So for the V1, it really is us making it fully autonomous and making sure that we can trust that each part fits well as we back off from the admin part of the governance of it. And that will be part of our focus. The other part of our focus will, of course, be going after this kind of vision where we become an open network. So the goal is relatively soon as the code really becomes proficient and robust for the V1.
All right. For sure. All right. So then, I want to sort of start coming towards the end of our conversation here, but sort of talk a little bit about, I like to be a little bit, maybe speculative is the word, maybe, dreaming and inspirational is a better term, but like looking beyond where we stand now, looking to the future, what an idealized vision looks like in the next, whatever we say, 12 months, maybe say 5 years. I don't want to set a time frame because obviously everyone has their own. Some projects are, too difficult to project 5 years ahead because who knows what the world's going to be looking like. But if you're talking about an idealized world, if you're talking about an idealized ecosystem in the future, what's it first? What first does it look like in the sort of crypto-based loan space and DeFi loan space? And secondly, what's Teller's role in that projecting into the longer term?
So the way that we think DeFi will evolve is similar to how traditional finance evolved from kind of the Mesopotamian era. Initially it was, I have something of value, I give that to you and you give me money. And that is what DeFi is today, collateralized lending. Those are going to be very central points of liquidity, where Compound and Aave, they will continue to amass more and more liquidity as more funds move into the crypto space. Where we think the next evolution will be is the same way that traditional finance evolved. It started at, if you have something, give it to me and I'll give you some form of cash. It next moved on to, hey, I trust you as a person. So, we can have some synergy there and I can lend to you and you can give it back. This is kind of how micro community-based lending evolved as well. But the third rung of that was, okay, how do we scale what is these one-to-one reputation systems into something that's one-to-many? And that's where traditional finance started seeing a super kind of inflated growth of new markets. Every different vertical you can imagine came up from that idea that we could have some type of one-to-many like reputation system. Credit, of course, being that. So where we're at with DeFi is that we have seemingly saturated the initial part of the over-collateralized space. It's going to be very hard for a protocol that's new, that is directly competing with a Compound or an Aave, to really amass the success that those protocols have. Where we think that DeFi will expand to is kind of the opposite of what it initially started as. Whereas it started as a couple major players that are amassing liquidity, we think the future of DeFi will be very compartmentalized to the type of market, as I've been referencing the different categories of if it's a DeFi under collateralized market, if it's a credit line, if it's for mortgages, etc., and the regional jurisdictions. Every jurisdiction has different compliance laws. It has different kind of legal enforcements. Obviously, something in a part of Australia is going to have different requirements than kind of maybe real estate in San Francisco. And because of this kind of fractionalization and compartmentalization we'll see of new DeFi markets, we see ourselves as kind of this horizontal layer as Teller to bridge the gap between the money markets that we're seeing on DeFi today, where people are launching new lending pools and new different types of use cases for their assets. We want to be that smart contract interface in the same way that Chainlink is a smart contract interface for data. We want to be a smart contract interface for credit and this type of risk assessed borrowing or capital borrowing. So for projects in the DeFi space that already have lending pools, they would be integrating us on top of them, where all of a sudden they can expand the current use case of their lending pool to something that is credit enabled and risk algorithm empowered. And for new kind of fintech companies that want to enter the DeFi space, they would be launching their own lending pool, and they would be plugging in a set of smart contract functions that enable them to expand into offering this world of the data that was provided by the user, the risk assessment, and finally the money being moved. So we really see Teller as this horizontal playing field, an open network for anyone to join and expanding the access of DeFi into new and
right.
Okay, I'm back. It looks like my Wi-Fi cut out. I'm not sure where you lost.
You were saying new and then.
I just wrapped here. Okay, perfect. Just
okay.
New geographic markets and new categories of markets in DeFi.
All right. Wonderful. Well, it sounds like you've got a powerful vision there. This is such obviously it's an exploring space, but it's developing so fast that I think it's so powerful to see what the latest trends are and the latest developments. And this is such a constantly moving picture. So, firstly, Ryan, I want to thank you for helping to explain a picture of firstly where Teller is, but also how you're developing the whole market as itself. And I think that powerful vision you laid out just there really helps give some clarity of where the market is heading towards. So in general, any last words, anything I'd like to give, the last chance to say any points or anything you want to clarify for the audience at large?
Yeah, definitely. I'd love to talk about what next steps the audience can do. Please head over to Teller's Twitter, where we're constantly posting new information and new releases around the platform itself. We are use Teller, so use and then the normal word Teller. The other thing is that if there's anyone in the audience that hasn't picked up one of the Teller NFTs, just to know we will soon be launching the alpha version of Teller's V1 that I've described. And that will include staking of NFTs that give you access to open credit lines. And these type of unsecured loans actually enable users to start getting access to credit. And eventually we'll be able to start building credit in DeFi. So please follow Teller at use Teller on Twitter, and you'll know when we do make the full release.
Exciting stuff. We'll be keen to follow it. Maybe we can have another follow-up conversation in a conference down the road and see where you guys are at once those new ones get launched and we've got those NFTs on board. It'll be an exciting time, and love seeing projects come to fruition once the development. But Ryan, thanks so much for speaking with us, and for everyone watching, keep staying with us. There's so much more good content to come throughout this entire conference.
Thank you. Take care, everyone.